Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, July 23rd, 2021. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. We have a pretty interesting discussion today. We have large cap stocks that are hitting new records. Small caps are just behind. We'll look at two leading sectors, which are communication services and technology sectors, and two of the leading stocks within those sectors, which we traded at Master Charts Trading, Facebook and Apple. Trader education section today will look how to understand and visualize support and resistance and how to use it to your advantage. Dollar is poised for a push higher. Again, please understand that this will weigh on gold and other precious metals, even if you don't like that. And again, objective reality trumps wishful thinking and hype. So we'll look at the recent alert for Dogecoin, which is down over 44%. Now this alert was to the downside. So if you took the opportunity, you should be up 44% if you took the opportunity to sell short. And I have two more newsletters. You can see there's quite a bit of stocks there. So one is called Elite, one is called Speculator. In Elite, we trade mostly ETFs and large cap stocks, while in the Speculator newsletter, we trade purely breakout stocks, and I'll explain what I mean there as well. All right, let's get right to it. So S&P 500, again, today hitting all-time record highs. These are records. Now, I mean, I do listen occasionally to the news, and this market has proven time and again that it can just do whatever it wants to do, which is basically what I enjoy about trading, is that we need to look at objective reality. And what is objective reality? Objective reality is that we had no signal to sell short. So if for some reason you wanted to sell short the stock market, you were disappointed multiple times. And this latest one was from the push lower on the 13th of July began. It's right there. It began on 13th of July, and we had 4 or 5 days to the downside. And we can actually look at the 4-hour charts, and I'll show you what I mean there. So again, I'm using my indicators. You can see those green, blue, red, and yellow lines. They are available at Master Charts Trading. You can also look in the description of the video to find the information there. Now the lines can be used to trade continuous instruments, for example, futures, Forex, on any time frame. So this particular example I'm showing you is a 4-hour time frame. And here you can kind of clearly see this push lower that began. There's 13th of July right there. And then we can kind of see the push lower that started in earnest on 16th of July. And we had a few days of this push lower. Again, this was very scary in a sense to some people because of the because people listen to the news. Again, I try to tell people not to do that, but notice how interesting. Notice where this push lower ended on the 4-hour chart. It just stopped right there at the red line. So even on this very short time frame on a 4-hour chart, there was no short signal. The short signal would have been if we saw a breakdown below this red line, and it didn't happen. So this is literally support held. You can kind of zoom in and see what it's like, but this is literally, you can see it very clearly. Support was held. Now again, these lines are not drawn in by hand. These are mathematically calculated. See, if I turn them off, you can't really see them. So again, this is objective reality. There was no short signal. On daily charts, obviously there was no short signal ever. If we look back to, let's say, last year, our long signal to buy breakout was in April of 2020. Before we closed our previous positions in February of 2020, before where the pandemic was announced. We did not sell short. You can see that I did not have a down arrow here, even though the signal was there, or on the in late March of 2020. There are multiple reasons for this. Some of it has to do with the fact that Federal Reserve began buying junk bonds, and junk bonds again and stocks correlate highly with one another. So I figured I'm not gonna, fight the Fed and all that. So what we did is we did nothing from February of 2020 until April of 2020 when we began buying. And actually this was, possibly this signal right there on the 15th of June. You can see that there was a touch of this blue support resistance line and then a close above. So this was like literally the last opportunity to get in for S&P 500. Since then, there was not even a signal to exit this position from April of 2020 because we trail at the blue support resistance line. We continuously trail and advance our stop, and you can clearly see that there was not yet a signal to exit. What we're seeing is a continuous string of new all-time record highs. So once again, looking at more zoomed in chart, we can see that we made a new record, but no way to sell short, no need to do that. We can just sit in a position and trail higher. Eventually we will get to the point where we will see a reversal and then we will consider selling short, but at this point there's just no way to do that. So all of the short sellers will continuously get clobbered until they stop doing that. When this will happen, we don't know. What does it all mean? It's again difficult to say, but the point of the matter is we can make money on the upside right now. It makes more sense for stock traders to make money on the upside. One day there will be an opportunity to do the opposite, but not yet. Within the stock market, obviously there are more stronger sectors. So here's NASDAQ, QQQ. NASDAQ actually exploded from the alert, which was back in April of last year. Excuse me, in last year, and the NASDAQ was just on a tear, and it continues to do that. So again, we were trailing at the blue support resistance line, and once again today we gapped to new records. There was a little tiny gap. I'll show you where I mean, right there from 22nd of July until today, 23rd of July, a little tiny gap, and then we continued higher and closed at all-time record highs. So this is showing good appetite for risk, strong preference for higher risk stocks. NASDAQ is higher risk than S&P. Within the sectors, IWM, we can get to that in a second, but small caps IWM have not yet made a new record. But overall, since the correlations are very high, so I'm going to show you the correlations. This red line, this red graph shows a correlation of S&P 500 to the IWM Russell 2000 small caps. And generally speaking, it is very positive. Most of the time, it's very, very positive. Occasionally, we get a negative correlation, so yeah, occasionally it drops into negative territory. That just means that S&P 500 was moving one way and the small caps at that time happened to be moving the other way. So actually this is happening right this instant. We see a negative correlation right this instant. It doesn't really mean much because by and large we're seeing strongly positive correlations. They move strongly together. So I think since large caps are moving higher, I think small caps will do the same, perhaps in a few weeks to a few months. So yes, there is a small divergence between small caps and large caps, but I wouldn't necessarily yet pay too much attention to it, so to speak. Within the stock market, here's XLC, communication services. So this is a relatively new sector that was created, but overall we traded the same way here. We had an opportunity to buy it back in May of last year for a 64% gain, and once again today it's a new record. You can see also another little gap higher. There's the little gap from yesterday to today, and a run higher to new all-time record highs. Within the XLC, within communication services, we trade some stocks. Some stocks also performed quite well. For example, Facebook, and we traded Facebook, which just closed at new records. So let me show you how we traded Facebook. So Facebook went on our buy signal right there on April 29th again, so last year. This was the latest opportunity because notice that we did not touch the blue support resistance. I prefer to buy around the blue support resistance because of the way I place my stops. So let's say I bought around the blue support resistance line, then I'll put my stop at the yellow line. I don't want to be buying at the green support resistance line. Again, you can find out more about my lines by looking at the description of the video. You can have the same lines on your chart on TradingView and now also on MetaTrader 5. Notice that once again we were trailing at the blue support resistance line, and even though we came kind of close to it, it was never touched. So now it gapped again to new records. It pushed to new records. So if you are following my system, then you have a 93% gain since last year. So it's basically doubled. I think the S&P can easily double or triple within the next 1 to 3 years. Some say this is an inflation, some say it's something else. I don't really worry about those things too much. I don't really worry about the reason why. I only worry about how am I going to trade and what am I trading. So in this case, we were trading Facebook, and how we traded it, we only did one thing. We bought it on close the blue line, and then followed the system and trailed the stock higher. So this is all I do. And once again, I can explain it in a few minutes. And I have a video explanation of how I do this. Here's XLK technology, and it's similar. There's the opportunity to buy, actually the latest opportunity to buy right there in April of last year, perhaps in May of last year, and that's it. You can see there was no pullback towards the blue support resistance line. There was no opportunity to get in. Again, new all-time record highs today. That's a 71% gain for the ETF. And you can understand that, that's just like an average gain within the stock sector. So we can, again, simply turn off our brain, buy on close above the blue support resistance line, and just ride it higher. Do nothing. Don't worry about why. Only worry about how and what. What do we trading? How are we trading it? Within XLK, excellent opportunity was to buy Apple. Good old Apple. So this one, you can see there was another opportunity to get in. So one opportunity was back in April of 2020, but then we had an opportunity in September of this year, of 2020. So a relatively recent opportunity was right there on 24th of September. And yes, it was the same thing. We were able to get in. So let me just kind of zoom in and I'll show you. So the stock came down, you can see it, towards the blue support resistance, touched it, and then closed above it. So there was this opportunity on 21st of September and another one right there on 24th. And then we sit in the position and we trail higher, trail at the blue support resistance, trail higher until, today again, 37% gain. That's very nice. And yeah, you just, same thing, we still trail at the blue support resistance line. You can take profits, absolutely. And I do all the time, I take profits. Although some people who are, well capitalized and have just really tons of patience, they do nothing. They just get in and sit in the position. And honestly, it's the best thing to do in the stock market. The longer you sit in the position, the better, for multiple reasons. Yeah, the tax, for tax reasons, but also for dividends. You get dividends from the longer term holds, and yeah, less stress as well. So the longer you keep, the better. So at this point, Apple, yeah, we just, again, sitting in the position doing nothing. My favorite kind of thing. This is, I wanted to show a support resistance and how to use it, how to read the chart. So this is more about chart reading. It's kind of like a trader education section. So this stock we traded, it is called Inovia. I think I actually traded myself. Yes, I actually traded myself. I bought it back in July. It spiked. I got out and just did nothing to it. But you can same thing. For example, here's an opportunity to buy it in December. Here, what I wanted to show is more kind of like, when you play musical notes, you need to be able to read the musical notes. So the same goes for chart reading. So here, I wanted to show how to read support and resistance. And of course, you need my indicators to understand support resistance, because if I turn them off, it makes no sense. There's just nothing to, for the mind or for the eye to see. However, if I turn them back on, so I turn them back on, the indicators back on, I'm going to show you how to read the charts. So here is the breakdown on 24th of March, and this blue support resistance line acted as resistance at this point. So you can see that on the 26th of March, then again on several days here in April, it touched the blue support resistance but never closed above it. So again, I'm going to zoom in. I'm just going to show you what I mean here. See, notice how they were really trying to push prices higher but never succeeded. So this blue support resistance line held. Okay, so this is called support, or the resistance held. Another one right there on the 27th of April, and this one is kind of like a classical shooting star candlestick. So the price came up, there is a shadow out of the top, a red body at the bottom of the candlestick. So this is a classical shooting star candlestick, and you need to read candlesticks in the context. So if this was a shooting star candlestick just somewhere hanging out in the middle of nowhere, then it wouldn't really mean much. Like, for example, this one right there where I'm hovering, 23rd of March. But this one was clearly in the right place because it touched the blue support resistance line and then closed below it. So this was actually meaningful candlestick. You see, some candlesticks are more meaningful than others. And then you can see it completely just bounced off of it and went towards the support, which it was at the red line. So support was still at the red line. And in fact, it broke it because it closed below it. So there's the broken support on 13th of May. So this is just for reading candlesticks. How do we read candlesticks? We need to have a context. You can't just read it in the middle of, in vacuum. This huge candlestick right there on the 25th of May, again, it was quite meaningful because the price really attempted to push higher, but it was strongly rejected. So this is called rejection. The prices came up, but the bulls, the bulls tried to push the prices higher, but the bears came in and said, no way. They collapsed the prices lower. Not only the price, there's a big shadow at the top, there's also a very large red body. So this is another enormous shooting star candlestick. And it had meaning because it tried to push above the blue support resistance, but it failed. Okay, so what I'm looking for right now is another push lower. Most likely this will continue lower. So right now you can see already one more close, several closes below the red support resistance. Most likely it will collapse lower. Just from experience, this type of pattern, when the price comes up, kind of like inverse head and shoulder. So this is and not a head and shoulder, but maybe a cup, inverse cup. So inverse cup, you can kind of measure the depth of this cup. That's at 20%. And so most likely it will be duplicated to the downside. So we can easily see a move lower towards the yellow line. So this is how to read candlesticks. Important thing here is to read candlesticks in the context of support and resistance. If you're trying to read candlesticks in the absence of support and resistance, like if I was to turn them off, it is very, very difficult. So I recommend, of course, you get my lines and simplify your life. All right, moving on to the dollar index. Here's dollar DXY on the daily chart. As usual, I always trade on daily charts. Some people trade on hourly and minute chart. That's fine, but I think the biggest gains are on daily charts and easiest to trade for humans. So the dollar started being in the bear market right there on the 2nd of June, where I'm hovering. You had an opportunity to sell it short again on 30th of June. And then we made a new low on the January 6th. Since then, we were able to make higher lows and higher highs, higher lows and higher highs. Additionally, you can see that the indicator lines were getting closer together. They were getting lower and lower. So what does that mean? If the price is down below here and the indicators are getting closer and lower, that means that the price will have easier time of getting to the bullish levels. And it is exactly what happened. First of all, we had weak resistance. So yellow line is weak resistance. Not a big deal. It happens all the time. You can see it was several closes above and below it. So I don't really pay attention much to it. But this surge that happened on 16th of June, 17th and 18th, not only overcame the yellow support resistance, it overcame the red. So it closed actually on 18th of June above this red support resistance line. Okay. So strong resistance was overcome. Price continued to trade sideways, but you can see the indicators came down even lower here in July of this year. So at this point, I was like, okay, this is most likely the end of the bear market for the dollar. And yes, right there where I'm hovering, 13th of July, we saw a breakout into the bull market. So when we see a close above the blue support resistance, we say that yes, we are now in a bull market. So when dollar breaks out in the bull market, it will weigh on various commodities. For example, gold and silver. So gold and silver, of course, are under pressure. We do trade it at MasterCharts Trading, and we have several positions open, so I can't show them to you in this free YouTube video. But if you sign up in the description, click on the description, find out where to go, you can take advantage of the service. So right now what I'm seeing is this flat consolidation just around the blue support resistance line, but we already broke into the bull market. So chances are we're going to continue higher, very strong chances. And if we look at, for example, gold miners, so here are the gold miners, GDX. As I just said, when dollar pushes higher, it will make gold and silver continue lower. It's just a normal relationship. And here are the gold miners. So gold miners actually entered the bear market here in 30th of March, where I'm hovering. They had a very big run higher, but notice that the resistance in this case at the blue support resistance line held. There was a touch of the support resistance lines on the 19th of May, but not a close above it. So this is called resistance was reaffirmed. Okay. And since then we saw another push lower. Here's another signal to sell it short on 17th of June. So yes, gold miners are in a bear market. Okay. And even though some people don't like it, some people say there's inflation coming, etc., I don't see it, right? I see objective reality. And objective reality is dollar is pushing higher, gold is pushing lower. In fact, most likely we will see new 52-week lows for the gold miners. We're already very, very close to new 52-week lows. 52-week lows will be below this 3rd of March lows. So this is very close. I think we're going to see another strong lower, push lower. Again, this could be like a, what do you call it? I'm going to draw in a something like that. So maybe this is a, I don't know, head and shoulders kind of business. So this is a 52-week lows, or rather, if we get to the 52-week new lows, then the depth of this pattern is, I don't know, 22%. We can easily move lower like that. So GDX could easily move to the low 20s, 2021 area. That's another 30% down. Obviously, the individual shares of gold miners will come under significant pressure. So please look at objective reality. Please look at the chart. Avoid looking at things like fundamentals of gold production or something of that nature, because they really mean nothing to traders. Traders will just say, "Oh wow, this is bad. Let's sell it short." Okay, this is my thinking. I don't really care what it is. I just want to make money off of it. You see. So this is how I read the charts. You can see there was a resistance, and we're most likely gonna collapse lower. This is a very strong chance. The reason being, again, is because of the dollar. Dollar is pushing higher. It will weigh on gold. And here's another excellent example. I got so much flack. It was hilarious. If you look at my posts on StockTwits, you can find me on StockTwits. Here's StockTwits. I can show you later on, but okay, I'll show you now. So Dogecoin, there's Dogecoin. So back here in, well, first of all, this huge breakdown on 21st of June. I don't know, probably had to do with Elon Musk saying one thing or another. I don't really pay attention to that, but sometimes it's hilarious. So I just kind of smile and look at the chart instead, right? So the chart was telling me to definitely not buy it. The chart was telling me this was a break, support break on the 21st of June, and it's clearly visible, right? Now, it's not clearly visible if I remove the lines, you see. So if I put my lines back, it's clearly visible. So this breakdown 21st of June, I'm like, okay, this is a support break. We just need to see a move higher, a touch of this red support resistance, and then a move, and then a close below it. This is exactly what happened. You see, there it is on the 25th of June, and then another one, I believe, on 29th of June, right there. And since then, that's a 44% gain. So if you shorted it at the red line, that's a 44% gain. You see, without I don't know anything about this stuff. These are just numbers to me. These are just, sticks, candlesticks, you see. So avoid the hype, avoid the news, avoid listening to pundits. This thing is not some kind of a new frontier in technology, and it will not replace the dollar. It's just numbers, and it's full of hype. Okay, so this is a very dangerous thing if you are trying to make money from trading and you're listening to fundamental and analysts, or you're listening to people who have an agenda to sell you stuff. So Dogecoin, of course, really has no meaning. It's just whatever people assign to it, right? And if we graph it, if we look at the chart, we can clearly see that it's going down. It's in a bear market. Most likely it will go to zero, because really nobody cares about it. I mean, some people care about it, but I don't understand why. Okay, so anyway, so here's my basic thinking. Once again, I have 2 more newsletters, so you can see there's quite a bit of stocks that I cover in those newsletters. There's a ton of them, actually. Again, there's just many opportunities right now. You don't have to take every single one, but there are some really good and interesting opportunities. And we trade gold, we trade lots of ETFs, we trade individual shares, we trade lots of breakout stocks as well. So if you're ready, go over to MasterChartsTrading.com. That's MasterChartsTrading.com. Click on products, sign up for one of the services. So I have trading indicators, which are these lines on the chart. This green, blue, red, and yellow line. I have the indicators and newsletters. So these are the elite and the stock speculator newsletters, where we go over all of the stocks and how to trade them. We also have a stock screener. So this stock screener actually sends you alerts on which stocks are closing above this or below this lines. So you can actually make your own trading decisions as well. And additionally, just very recently, we have now a MetaTrader lines for the MetaTrader. So they're available now for MetaTrader 5. So sign up for that if you're ready. Right, if you have any questions, let me know. Thanks for watching and have another great trading week. Bye-bye.